Welcome to the Cover Your Assets podcast, a show for the physician who understands the importance of protecting everything you've worked so hard to achieve. If you're ready to find the peace of mind that only financial security can bring, let's get started. Here's your host, Billy Gwaltney.
Hello, welcome to today's episode of the Cover Your Assets podcast. I'm your host, Billy Gwaltney. I'm excited to be with you as always. In this episode, we're going to answer the question of what happens to my disability policy if my income goes down. I get this question a good bit in working with physicians across the country and helping them secure their private specialty on occupation disability coverage. And one of the key elements to this coverage is that once the policy is issued, as long as the premium is paid, nothing can change. They're what's called non-cancelable and guaranteed renewable, which is what is highly advisable to be sure your policy is non-cancelable and guaranteed renewable. And what that means in insurance terms is that the policy can never be canceled, not by the insurance company. It can be canceled by you at any time, but it cannot be canceled by the insurance company. The definitions can never be changed and the rate can never be increased. And also nothing regarding the amount or the premium can be changed in any way. So if you have $5,000 a month of coverage and you become disabled and that's what you're paying for is $5,000, which is the common amount that most trainee physicians that we work with start out with, then that's going to be the amount that they pay. If you have increased your coverage, if your policy has either a future increase option or a benefit increase rider that allows you to increase coverage in the future based on your attending income, then, and you exercise that and you increase the coverage, or if you just layer another policy on top and you have two policies for $5,000 because in both required medical screening or just gotten at separate times. But if they're individual, non-cancelable and guaranteed renewable disability policies, if they're structured properly, then the amount of the benefit is the amount that's going to be paid if a disability occurs, even if your income at the time of the claim is less. Okay, so we have a lot of clients as their income increases in the first decade or so of their attending career, they will increase their coverage to the maximum amount that the insurance company will allow them to have based on that income. And over the course of their career, they may step back at times and maybe not do as much call or not work as many hours or start taking certain days of the week off, and their income might come down, where they may go to an academic position. They just may change, kind of switch lanes a little bit, and their income can decrease. Well, as long as they pay the premium for the amount of the insurance that they bought based on their higher income, then that's the amount of insurance they have. So if they become disabled, they're going to get that higher benefit. So the insurance company cannot come back in a properly designed specialty disability policy. They cannot come back and say, hey, we don't owe you this higher benefit because now when you're disabled, your income would not have supported that. They cannot say that. They have to just go, okay, your doctor says that you cannot do your specialty or cannot do the material duties of your occupation, then we owe you this benefit. Now, if you want to, this is what I tell clients is that this is not a mortgage, and that means that you can walk away at any time. You can also reduce the premium and the coverage at any time. So if there was ever a time when you had $20,000 a month of coverage and you don't want to pay for that, you want to drop it to $10,000, then you can do that. It's not necessarily advisable because expenses typically go up during a claim. And so if an insurance company has issued a high amount of insurance or the amount based on the maximum amount you can get based on your income when it's at its peak, it's generally a good idea to consider keeping that throughout your career, regardless of whether or not your income goes down the road. So the good news is that nothing changes with your disability policy. Again, if it's structured properly, I keep adding that caveat because I can only tell you with working with the top carriers and the way we structure contracts for our physician clients across the country, that you can reduce the amount if you want to, but if you don't want to, then that amount stays intact and that's what would be paid regardless of whether your income supports that at the time of claim. Happy to discuss your situation in more detail if it would be helpful. Hopefully this has been helpful, at least giving you an idea of the answer to the question of what happens if your income goes down feel free to reach out to me anytime. I'd be happy to schedule a time to discuss with you. My number, if you want to text, is 704-270-2376. Again, 704-270-2376. Look forward to seeing you next time. Thank you as always for your time.
Thanks for listening to the Cover Your Assets podcast, a Work P2P production. New episodes drop every 2 weeks. If you've enjoyed the conversation, subscribe, rate, and review this podcast. For more tips and advice, visit the website and YouTube channel. Check the show notes for links. Join us next time for another episode dedicated to helping physicians like you get your disability insurance right and protect your way of life.